So let's first begin with what's going on with the stream. So for about 3 years now, and almost 300 videos, I've been doing these broadcasts, either the midweek review, midweek update like this, the live I call it, or the weekend review for free. Honestly, it started to take on a life of its own, and I was realizing more and more just how much of my time it was taking. To do a to do the video, it takes me almost about 2 hours, believe it or not, between preparation to go through the charts, recording, and then video updates. And it was honestly just taking up more and more of my time. And I was finding on my weekends that I was structuring my life around the videos. And the end goal has always been to start a subscription service that has mobile alerts and where I can send out trade information. And I figured that I've always said that I would launch it when I get to about 10,000 followers, and I decided rather than fork up a lot of money, which, believe it or not, to build that service out, I've been doing a lot of research over the past, I don't know, 6 months or a year, is pretty expensive. And I didn't want to spend, tens of thousands of dollars building this thing if people weren't willing to pay for it. So I decided to start charging for the videos, one, to do a test marketing to see what the demand would be for the subscription service, and two, to start helping fund it, bring in some income, and really three, frankly, just a bit of a compensation for the time. I decided to make it inexpensive. I'm only charging for the monthly subscription $49.99. And then a la carte, I've been even offering the videos for $5.99. That number isn't random, by the way. I decided I wanted to make it enough that it makes sense to do, but cheap enough that everyone could afford it. I know not everyone has, big accounts. And I decided to price it at roughly around the same price as an execution of a trade. It's not a coincidental number. So, if you pick up one trade idea out of my videos, and believe me, there are many, it more than pays for itself. So, $5.99, frankly, is basically free, but I wanted to that's the reason, those three issues, gauging the demand for the subscription service, helping to fund it, and also the compensation for some of the time. So I didn't mean to, do a hard jump into that. I guess there's no time like the present, as they say. There will still be some material I do like these once in a while. I'll do in front of the paywall, but a lot of the stuff will be behind, it will be for paying members, of course. And I also think that having the subscription and the pay is going to enable me to do more special edition videos that paying subscribers will have access to. I haven't decided whether I'll make those special editions available a la carte. They may be, but paying monthly subscribers will get those for free for as long as I do the subscription site for it, which should be for a while. I'm going to do a lot of them on options trading. I'm going to do some on trading psychology. I'm going to do a 2.0 on risk management. There's been legions of new risk management tools that I've learned. How to manage bad trades, how to manage good trades. There's going to be a ton of new material that's going to be hitting there. And I'm going to be even updating this. The midweek update is going to start having charts soon. I have to get that software online, but we're going to start getting a little bit more advanced. And when you do get more advanced, there's more tech involved, and it starts getting a little bit expensive. So that's the reason why I've been charging, or going to basically start running it as a subscription model. So I hope that answers some questions. It's not that I'm being greedy and trying to juice people for money. It's honestly just gotten to the point where it requires that. So that's the scoop on it. Anyhow, let's jump into some stocks. And oh, by the way, if you want to subscribe for the subscription channel, there's a link in my Twitter account now. You can just click on that. And going forward, we will be doing both subscription and a la carte, or one of the. Oh, all right. So I'm easing the transition in from going from free, basically. I know not everyone watches this every week. Um, I'm going from the transition from free to paid. I'm trying to do it as painlessly as possible, although I've heard from many people there's a lot of issues, like they are in other countries that don't have pay deals with YouTube. The way I've been telling people, or the way to kind of get around that, is to download a browser with that has a VPN built in, virtual private network, like Opera. It's in there for free, and then you can kind of get around it. You just click the United States, and you should be able to subscribe. I had a gentleman from actually in Saudi Arabia who was having this problem. Apparently, I have a pretty big following in Saudi Arabia. It's unbelievable. That's, I guess, because I talk about oil. So that's the scoop. If you want to, for the time being, I think I'm going to offer them both a la carte and subscription. From what I've heard from people, that the a la carte is hard to purchase on the mobile, that you could only see the preview, or if you actually have the subscription, then you could always see them. So I'm really suggesting to people to do the subscription. I honestly also think that's really where the value is going to be. Because of all of the new videos that I'm going to do with regard to the special edition videos. You know, I used to do those once in a while. They are going to be a lot, regularly, and they're going to be good. So that's my scoop. If you want to do the a la carte, either way, honestly, I don't care. 6 one, half a dozen of the other. But I think from what I'm hearing, as far as the ease of use and where I think the real value is going to be, I would say the subscription is the better way to go. So that's the story with that. And again, the link to that is in my Twitter account. Anyway, let's talk about some stocks, right? We spent a decent amount of time talking about the subscription. If you missed this video or want to watch it again, it will be on both the paid and the free site. How often I do these now, like I said, in front of the paywall, the free version will be, once in a while, but it won't be regularly like it was. I'm trying to ease into it again. I really don't want anyone to be upset about it, but that's the scoop. All right, so let's talk a little bit about the markets. A lot of you actually saw the weekend video this week. I was actually very thankful. Thank you guys so much for the support. I appreciate it. There were some really pretty good calls in there that I think are playing out. Let's attack this a little bit differently, because I know a lot of people didn't see the weekend video. I'm going to start out with the major market indices quickly, with a couple of my setups here that I see as highly actionable here, and then we're going to talk about some of the ones that you wanted to get into. There's been a lot of noise in the market, with the Trump Jr. stuff, with the North Korea. A lot of that has just been noise and pretty much algorithmic driven. I think you could tell when moves are real or not by looking into the market internals. By the way, I am going to do a special edition video on my setup, my actual setup. And I'll say this, I was holding off for the full-on subscription service, but anybody who signs up to the pay service in the next 2 weeks, I will send my Think script to you, and you could have my setup. I call it the grid. You could have my grid. I guess I'll save it into a file or email it. Just forward me the email with your subscription, and I'll forward you the Think script, and you can save that into your Thinkorswim platform, and then you could see what I'm seeing with the breadth ratios and all that good stuff. Anyway, let's get going into the market. So, as far as the ES goes, it's been we're sort of in a lateral pattern. If you have watched I think the video from 2 weeks ago, I talked about this, where I said we were in a bit of a time correction, not so much of a price correction, although there have been times where it seemed like we were going into a price correction. So today, remember I had said we had a look above and fail, and I thought we'd see the lower end of range. We did. And then we had a look below and fail, and now we're back up to the kind of the higher end of the range. We're in a sideways down channel. Oddly enough, today in both the NASDAQ and the S&P, and I'm talking about Qs and SPY, we stopped. We had a look above, And I think in the SPY we closed a hair above the down channel, the downtrend. So now we filled the gap 2 days ago, pulled back, and now back up again. So technically we're at the higher end of the channel. Now what I suggested today, if you were wanting to put on protection or cheap short bets, to do what I called the put spread overwrites. And I did some more today out in September. Honestly, these have all basically been going out worthless, but they haven't been costing me much, if anything, to put on. And they are high return, low risk bets unless you get some kind of major outsized move in the market. The ones I put on today were 242 by 237 with an overwrite in 229s, which is the true breakout. So if the market comes down, I'll have protection, and I think I put it on for like 5 cents, so it was like nothing. I didn't do this very large. I would leg into it and get bigger if the market actually started coming down, though, if that makes sense. Usually you want to do these plays into weakness, but I have some of these expiring, and I wanted to get some protection and a couple of cheap short bets on. So I put this on. By the way, these kinds of things will be in the main types of service, and I'll be talking more and more about this in videos. I know people like this, and we're going to get very into this stuff. So we stopped today on the channel high. So we have a breakout range today. Someone said, "Oh, how am I doing it?" I'm doing it one by one and by one. So let's say you were going to do let's just say you're going to do a one lot. I like to talk in ones and twos because I know people have different account sizes. You could do 10s and 20s or whatever, 50s and 100s. I don't know what you guys are playing with, but let's keep it simple. You'd buy 1 242, sell 1 237, and sell 1 229, and you can get that on for like a 5-cent debit. I love to do these when they're credits, but it's really rare lately to get that. So I just put it on small, and I'd probably add to it if we started coming down. It's a little longer dated than I would have liked, because if you get a fast move down, the overwrite goes under pressure. There's ways to mitigate that problem. We'll get into that at a later point. If it ever did happen, I would start tweeting or do a video on how to manage that. But usually you could either roll down, or you can turn it into a butterfly, like you were saying. Like you have that extra short put, you could buy still further and then sell even still further again. There's a lot of ways, or you can even sell upside call spreads, bear call spreads to hedge it. There's a lot of ways to do it, and I'll maybe get into that a little more aggressively if people are interested in some type of a special edition video. All right, so my take on this today is today was a break of the trend within the channel, but we stalled on the channel high. So I would either like to be long above today's high of day for a retest of the old all-time high of 245s and potentially a move to the larger channel high, which is up around 246s to 247s, depending on how you trade it. Or I would like to be short below today's low of day for a move to the gap fill play. Like if today's low of day failed, I would say today was just a retest of the channel high, and now we're going to probably come down at least to mid-channel. I'd be thinking 242s to basically 242s is where I'd be thinking. So that's my scoop on that. If you want to get a little bit more granular, intraday, one day, let's look on the 5-minute chart. Where was VWAP today? Basically around here. If you want to enter a right or right out play, we have a intraday pullback low of 243.52. That to me would be an actionable play as well. Oddly enough, the way today set out, if tomorrow were to rally, like let's say to like 244.10, and then break that neckline, you'd have an intraday into next day head and shoulders on the 5-minute chart, and maybe you get some type of a pullback. Today's high was a poor high, so that's why I think you had the sell-off a little bit into the close. Breadth today at points were up to 5-to-1 positive. We closed just below 3-to-1 positive. I don't take the selling into the close like super seriously. I think it was a function of having a poor high. I've done videos, by the way, on poor highs and poor lows. It just means that you have a bell curve and you don't have the excess. So the last buyers sort of are the first to panic out, and you get the pullback. So often what you'll have is the poor high, you'll have the initial back off, and then the repair. We have multiple poor high. The move down has been a result of many days stacked of poor highs and multiple sort of liquidation break lower. And we've had these 100% retracements. I'm seeing the market as mostly a series of liquidation breaks and a series of short squeezes with very little conviction in either way. Like the buyers can't get traction and the sellers can't get traction, and you sort of have this push and pull. So I would say that the above today's high would trigger to me a right or right out long for the move up, below the low, or that intraday swing low. I think you could try right or right out short. The Qs are also a very interesting spot. And I think this is going to be very telling today. We've had multiple days up, basically off of the reference low, the 135.87, and today's high, the close, stalled right on the downtrend line and right on the backside of the old up channel. Often you'll have a break of the up channel and then a check back. So below today's low of day, I think you could play for a short for a gap fill. Above the high, I think you would start moving up maybe for a retest into the high, the old high. So today's range to me is very key and very actionable. The best thing that I think the bulls could do is have some type of sideways chop that doesn't take out the 50, like you have a successful 50 MA hold. So if tomorrow is an inside bar or like slight down or slight up, just sideways, the more days you stack in here, I would say the better, because you've had now multiple up days. You had 1, 2, 3, 4 up days with a gap. You might have 5. They tend to move in odd numbers. And I would say that you could see maybe a little bit more, but I would like to see a little sideways action. At the very least, the good news is that the S&P is back over the 50 MA. So I would say if you're looking for a right or right out long and a pullback, you try it at basically the 50 MA gap fill area, and then see. If it doesn't hold, you're out because it's a right or right out. If you can continue above, I think we'll float higher, because that to me would be pattern failure. Oh, this is QQQ I'm talking about here. The Russell, the IWM, has had some decent relative strength to all of, no, this was Qs I was just talking about. Now we're into the Russell. You had the gap fill today. You had basically almost a test of the downtrend, although this isn't really a downtrend. It's really been sideways. And that has been holding the 50 MA. So the 50 MA, we're sort of at the top end of the range here, and the lower end of the range is around the 50 MA, and the 100 is catching up pretty quickly. Russell didn't close particularly strong today, but I would say you could probably use today's range as a gauge, particularly the body of today's bar. So I think tomorrow, if it's up, I think you could use above today's close as a long, and then today below the low, I would try right or right out short. Let's get into some of the stocks here. So now that we've covered the major market indices, we can cover some stocks. Let's talk TLT quickly, the bonds. Now, these geniuses on television, in all of their infinite wisdom, seem to think that they can never make up their mind. Are rising or low or falling bond prices, which are good for the market? The answer is falling yields are good for the market. I've talked about this ad infinitum with regard to the DCF analysis, discounted cash flows. You've had a pullback from a higher high on this leg in the TLT to the 50% fib, and now you're back up above the 200 and into trend. I think as long as it's above the 200, the play is long for a further bounce. If you start getting back below 123.15, I would say that you're probably going to have another leg lower down to 121s or 120. That then, in my view, could potentially set up some type of a head and shoulders pattern. Like maybe it comes back down to there, has a rally back up to like 125, and then maybe we really do have a top in terms of bonds. But as far as we go now, anything above the 200 MA, anything above 123.15 is still okay if you're playing the long. Remember I had talked about buying the dip down here for a long, which I have on. I have a call spread on. I'm looking to kind of take it off around 120, oddly around 125. So that's the scoop. If we were to start losing the 123s, I would bail on that. I'm talking about TLT terms right now. No, I don't. All right, so the question was when, I guess I think the real question that was just asked is when does yields become a problem? The answer is they will when they do, if that makes sense. I hate to kind of cuff it like that, but in the past, when I was in college, for example, I have a very fancy finance degree from NYU Stern School of Business. I was actually a double major in both finance and marketing. That was really more of circumstance. You couldn't minor, so if you just took all 4 electives in another thing, you had a double major. Pretty much everyone did that. I don't know what it's like today, but anyway. So fine. Anyway, as far as yields go, I think the answer is how they get there. If they slowly start rising, it won't be a problem. But if the rate of change picks up, like you start getting a cascade in bonds down, I don't think the market would like it. Particularly these momentum stocks, the FANG names. They like low interest rates. They don't like high interest rates. In the past, and this is what I was getting at, when you're taught how to model, in the past, we've used 5% is just the risk-free rate. That's what it's known as. Now, if I were teaching finance, which I'm not, and I haven't been in a class for a while, I could maybe email one of my old professors and ask what they're using. I would probably be using 3.5%, 3 to 3.5% as my long-term rate, because that's where the Fed said that they're going to cap it. It's about 3.5. That's their neutral end target rate, meaning the point where it no longer benefits or hurts the economy. I think as long as they stick to that, it's sort of okay, because historically that's very low anyway. When the economy starts running into problems, or I should say the market runs into problems, is when the Fed gets the rate to above, basically to 6%. Once it's at 6%, that's when you slam on the brakes and the market crashes, basically. Happened in 1929, it happened in 2001, and again in 2007. So that's the rate. I think that Yellen, in all of her infinite wisdom, has learned the lessons of markets past, and they have said that they're only going to normalize at 3.5%. So I don't really see rates being the problem for the next calamity, unless they start breaching that level. So I think if you started getting above 3.5%, then maybe it becomes a problem for the markets. I've been saying that 4% yield, in stocks, 4 to 5 has usually been the kind of the support. Like I've been talking about this General Electric, although it got a pretty nice bounce here right off of one of my levels. Remember I was talking about the fibs. We stopped on the 50% fib. There's a gap fill at 25.47 and 24.58. So I like the idea of selling out of the money puts, or starting to nibble into GE, by the way, at those sort of depressed levels. So that's the TLT. One I've been watching also, when it's hard to talk TLT without talking HYG. I know we've been in a bit of a down channel, and I said I didn't think I was reading too much of it until we started breaking the 200 MA. We're now back up again. We haven't broken the downtrend, but we're still in this sort of sideways chop. I don't see anything going wrong in terms of credit at the moment, because while growth might be slowing, it has not turned negative yet, and I'm actually thinking it's going to start to pick up again. Let's just go in order of what we've wanted to discuss here. I had a friend of mine actually call me today, lovely young lady, who messaged me today about Apple. She had been put into Apple stock because she was short a 150 put. And I was telling her that I thought that Apple could rally up to fill the gap, maybe to the 50 MA, and that's where I'd be looking to maybe book or try a write or write out short. and I said to her to use the 2-day low, because that's basically the 20, that you have the 100 MA, the 20, and the 10 MA all stacked up here. So I would say if you started losing like 144 strike, you'd probably want to bail on Apple or try a right or right out short for at least 2 points. We've been basically banging around in range with 47.5 being the high end of range and like 42.20 being the low end of range. So it's work to kind of put it out at the high end and then cover or reverse at the low end. I don't think we really get resolution in Apple until that breaks, and it might take the earnings to do it. So, so this is my thoughts on Apple. If we rally into the number, it's probably to book profits or to short. If it declines in the old shake and bake, meaning it gets shaken out only to bake back higher, I think it's going to be a Costanza. Do the opposite on this earnings. Whether or not traders are willing to look past this quarter, because this isn't historically a good quarter. Everyone's waiting, right, for the release in the iPhone. By the way, how'd you like that nonsense that came out today? That analyst said, oh, Apple's having software problems and technical problems. I hear this every frickin' year about Apple. Every year some analyst comes out and says, oh, they're going to be a delayed iPhone. There's never a delayed iPhone. So I'm guessing that's just nonsense, that they'll get their phone out. But Apple won't defend themselves, and it's just too easy to kind of knock the stock around. So I think that the better play for Apple, if you want to play the range here, and then I would say maybe if you want to do it with options, do kind of the opposite of whatever it does into the print. The safer play, and what I'll likely be doing unless we get some kind of extreme move, is waiting for the print and then making my decision for the fall play after the number. My ideal, though, is for this stock to come down into the number, maybe get a little panicky, get the shake and bake, and then maybe own it for the print, because it would probably be a buy the dip opportunity. And if it goes down on the print, by the way, within a few days, I would say it's probably a buy anyway. Tesla. All right, I was very detailed with this. We were playing long, and then on the 629, it was bail time. Once we lost those 2-day lows, and the stock got the old wackarooski. I remember on 710, I said we had to look below and fail, and I thought we would have a move back up. We have. I think it's got a little bit more bounce in the ounce to the 50 MA. But at that point, I'd probably be looking to bail and just wait for those earnings here. I would like to either see this stock get nailed big time into the earnings, like come down more for a buy. I do think that there's an opportunity in this. The really big levels in Tesla are like 265 to 269. And then there's another support range between 291 and 287. I was actually hoping for a bit of a press lower. It didn't quite get it. It held very well at the 303.48. I think the exact low here was 303.13. So it's still trading very technically. There's a lot of catalysts into the fall. I sort of don't like to talk about earnings until it's like right before it, because there's so much runway between here and there could be such price movement. It doesn't pay to do any type of play ahead of there, but I think there is a little bit more room to the 50 MA, where I think you could either try a right or right out short for a pullback. Maybe it does wind up floating up a little bit higher, but if you were playing for that bounce, you'd probably want to be looking to play for the 50 MA to kind of book it a bit. IBB, we were bullish on. I said it was going to have a pullback. It has. We're now in a bit of a bull flag. The 20 MA has been supporting, so if you're long, you'd be looking for this range low as your stop. So a move below like the 20 MA, a move below like 308.49. I think you could probably try right or right out short, but then I'd be looking to basically sell puts again mid-channel there, right on the 301.80 breakout. So there could be a move a little bit lower, and I would say that that area is a good area for a buy, because you have the 50 and 100 MA confluence there, and that's really the retest of the breakout. I'm going to do a little on-the-fly Fibonacci analysis. My guess is that that's going to coincide with naturally with a technical level. 280, 260. Let me just adjust this. I don't want to cuff it. We don't do that. We get the numbers correctly here. 320, 345. All right. So here's the on-the-fly Fibonacci analysis, and on pullbacks we don't talk about 38.2s. So the 50% fib and the 61.8 are stacked on either side of 300. So any pullback, again, into that region, I think you could sell out of the money puts at or below the strike of the 200-day moving average. If you can get back up now above the flag on momentum, like if you're able to clear 317s, I don't even know if you need to wait for 317s, 316s, 316.18 in particular, I would say that the play would be back higher. As of now, it's just in a sideways. I like the idea of a put sale, though, on that check back. And it's also roughly around a gap fill into that zone. So if you want to play the Chicken Little way, you'd be looking to sell puts at the 200 MA strike on any weakness pullback. So I do think IBB is improving, and I think that there is a big change in that stock. So Grubhub, let's take a look at that. Not one I talk about very often. I haven't played this stock in some time now. This could be forming a Head and Shoulders here. You have a doji on a breakout kind of attempt today. I would say you could be long over today's high or short below today's low for a right or right out play. Yeah, that's my take on that. Skyworks, not one I talk about very often. Oh, I'm so glad someone asked about this. Now, here's a little trick I learned back in the day. Skyworks is often an early tell for Apple. So if Skyworks is up on their earnings, I'll be playing Apple long for earnings. If Skyworks is down on their earnings, I'll be playing Apple short for their earnings. And they report like 10 days or so before that. So that's the scoop with Skyworks. This had a bit of a range breakdown. I think that you could probably try a right or right out short on the 50 MA for a rollback. You really, in my view, for this to get healthy again, need to clear 105.85 on a sustained basis. Until that kind of clears, between the 50 MA and that area will be some resistance. So that's my take. I'd like to see this had one leg lower. I'd like to see this actually have another leg lower, preferably ahead of the earnings, and then I think it would set up long. But this to me looks like it could have maybe the earnings are the next leg lower, right? That is also possible. So 50 MA, row short for a pullback, or if you're long, a place to book. And then, in my view, it really, even if you wait for the earnings, if it can get itself above the 105.85, even if it's in the after hours, then I think you can trigger a long. And again, that's a good tell for the old Apple. The oil, someone just asked about oil. So oil is trying to form, it could be forming some kind of like quasi inverse Head and Shoulders here. Because it stopped basically on the 43.76. You have double, almost like tweezers there with a higher low. It needs to clear the 50 MA. If oil clears the 50 MA, I think the squeeze will be on. Anything below there to me is still a little iffy and just choppy in range. At some point, I think this wants to see 62s, but it sure hasn't just yet. SLV. That's the next in line here. This had a big look below and fail, and now back up into range. Anything over 14.85, I think, is still playable to the long side. I was talking about selling puts down there. Those have been working, but just don't let it get back below 14.85. Boeing. All right, so this is This stock always reminds me of why picking tops is difficult. Although today's action, I could see wanting to do it again. If you want to try short Boeing, just do it against today's high of day. I tried it tried it on 620. On that break below, I was promptly stopped out, and I wasn't stubborn, which was good. It went higher, pulled back, and now even higher. So if you're going to do it, try the short, try it against today's high of day. I don't love trying to pick tops, and this stock is just a pain in the ass. I don't know whether any politer way to say it. It likes to make these like topping tails, and then it's like pulling teeth getting it lower. They just got this big contract for an updated F-18 to fill up the carrier fleet, which I think is a fantastic purchase, by the way. So hats off to El Presidente for that move. But Boeing, I guess you could try, if you want to try short below today's low on a break like tomorrow. On a gap, it's even better. So, and then let's say there was a gap below today's low tomorrow, you would use the high of day as a stop not today's high of day, but like tomorrow's high of day. Restoration Hardware. I've played this now successfully multiple times on when it gets those pullback dumps, and I've been both times way too conservative on how much it could rally back. Like I talked about buying this thing at 41s, but then talked about selling it out at 52s, and now it's at 69s. So I talked about 52s and 57s at the gap fill, but I mean this thing is unbelievable. It now had a success. I was hoping for a bit more of a pullback. I actually had some buy orders down in the 52s, but I don't know if we're getting that now. You've had you had a pullback to retest the breakout point. I think if you want to play this Chicken Little way, is there any juice in there? Let's see. RH. Yeah, of course not. If you want to go a little longer dated with this, like if you're looking to build a position, I think you could sell out of the money puts like at 52 or below strikes. I think that those will be okay. This could have some pressure lower, but to me this pattern looks good. It's probably just going to chop and grind higher. That's my take on Restoration Hardware. Let's end on Chipotle. This got exactly down to target. I've been saying to wait, and today was the day to do it. Yesterday or today. So today was a look below and fail of yesterday's low of day on the range low, which was 394.19. I can't tell you how this is going to act on earnings, and I have a rule. I don't play Chipotle on earnings. I was once very, very badly burnt on a silly little out-of-the-money short puts play, and this was the summer that Chipotle gapped down $100 when I was away on vacation, and it cost me a cool 18 grand. I was not happy about that. So I don't play this sucker on earnings. Anyway, the scoop with this is I think you could play long above today's high of day tomorrow for a rally ahead. The play to me would be a rally ahead of the print, like a little squeeze. Like all these people who have been short, they don't want to be necessarily short for earnings, and it could get a relief rally ahead of the print. I've done this before. I've talked about this in Gilead in the past. So they report on 725. So maybe you get a couple of days or a couple of weeks of a bounce. The more convincing it gets, the less I want to own it into the print. Like it'll look great, right, ahead, and then it'll get nailed again. So we'll see about that. If this were to continue lower ahead of earnings, like just continue the cascade, then I do want to play long for earnings because I think it'll be so overdone at that point. Like if this were to like somehow get back down to like 350, I'd be all over that long for earnings, frankly. So I think the play is long above today's high for like a bounce squeeze play. If it gets below today's low of day, I think you could do some put spreads or put ratios for a move a little bit lower. Although I'm really not looking for a short anymore in this thing. It's come down so much. It's sort of like it's sort of like it's already been down a lot. So I am looking for a long setup in this, either above today's high of day or lower. Yeah, so that's the play with Chipotle. Anyway, that's my story. I'm sticking to it. I hope you enjoyed the broadcast. Again, I'm not so sure how many more of these we're going to be doing on the free basis. I will be doing, obviously, my videos now at the subscription service. I've explained the reasons why, and I look forward to seeing most of you in that format. It's also a little bit more intimate. I'll be able to answer more questions, more individualized, and the link for that service is in my Twitter profile. If you just look at the profile, there's a link. You click on that, and it's a nominal fee per month. Anyhow, that's my story. I'm sticking to it. This will be rebroadcast on my YouTube channel, so I will put that up shortly. However long it takes to download and upload, it'll be up there. Have a great rest of your week, and cheers. I totally forgot how to even end these broadcasts at this point. There we go.